Hello and welcome. My name is Joe O'Mara. I'm the head of aviation finance with KPMG. And on behalf of KPMG and Airline Economics, I'm delighted to be joined by Thomas Baker. Thomas is the CEO of Aviation Capital Group. Thomas, I should say, is joining us for the purposes of our Aviation Leaders Report 2022, and we're recording this 5 days before Christmas. Thomas, before we get into the meat of the conversation, would you like to tell our watchers, most of whom will have a very good idea, a little bit about ACG?
Yes, and thank you for having me. Aviation Capital Group, we are a global first full-service operating lessor focused on core narrow-body technology aircraft. We have a portfolio of approximately 400 owned, committed, and managed aircraft based in Newport Beach, California, and we are a 100% owned subsidiary of Tokyo Century, which is a Tokyo Stock Exchange listed specialty finance company.
Great, thanks, Thomas. And Thomas, maybe kicking off, given the size of the fleet and the global scale that you have, would you mind talking us through how you've seen customer performance evolve over the course of 2021?
Sure. Obviously, and look, everything goes in fits and starts. So it's difficult to describe a straight line even through 2021. But I think, we firmly believe that we saw a solidifying within the industry, people getting their feet around a frustratingly slow, but steady recovery. Certainly uneven in certain parts of the world, but what we're seeing now, the lessor industry, the community at large, and the airlines work together to manage through an extremely difficult time. Traffic's coming back, and we are now starting to see people redeploy for the next upcycle, particularly where we focus on narrow-body technology. So people putting aircraft back in service, shorter haul, domestic, VFR type traffic. But we really do firmly believe that as we move into spring and summer 22, you will continue to see that trend. Unfortunately, there are some bumps along the way. There have been since the pandemic started. So we need to grind through this latest variant and probably a relatively challenging winter season. But we remain quite optimistic about the go forward, beginning into spring and 2022, summer, and then beyond.
And the opportunity side of that, Thomas, where are you seeing that? Is it around a particular type of airline or around a particular geography? That's what I'm wondering is the fundamentals of how you're assessing, the value of a new transaction. How has that changed in a post-COVID environment?
Sure. I think it's multifaceted. So I think certainly geography has something to do with it. As we've seen, some parts of the world have managed the pandemic a little bit better, have managed vaccinations a little bit better, and are so coming out of and obviously government restrictions in terms of allowing people to flow freely across borders. Some regions have handled that better than others. And so those dynamics have had a meaningful impact on the relative rebound in air traffic per regions. And so, certainly where we see in the United States, where we saw in Europe, where we saw in Mexico, and obviously it's summertime in Brazil and other places starting to come back online, we've seen airlines now starting to plan for the future. So we've seen survivors looking to add capacity. We've seen people starting to plan ahead and look for what they expect to be a very strong recovery when it does come, based on what they've seen in the US and other places. And we're also seeing people start to migrate into new technology aircraft, or they have new technology aircraft delivering in the medium term, but they need bridging lift, they need capacity, they want to extend aircraft. So we see people starting to plan around the future again. And the future requires more capacity. And so that's where we've really been focusing our energies. And again, I'll remind you, we're a core narrow body focused aircraft. So we are not nearly as exposed to international front of the wide body aircraft business traffic. We are core narrow body domestic traffic, shorter haul, intra-regional VFR traffic, which obviously we've seen in many places comes back first, comes back strongest. And we've certainly witnessed that.
And looking more broadly, maybe at the wider leasing market, including yourselves, Thomas, there's an expectation that, or a belief, I would say, that we've now breached that 50% threshold that we've talked about for a long time, a percentage of leased aircraft. And given the scale of distress and challenge that we've seen on airline balance sheets, that will increase possibly materially in the near term. Do you think the pandemic is going to give rise to a long-term shift in the popularity of leasing as a funding source? And that percentage of leased aircraft, do you think that has a ceiling that they can get to go to and hit?
So I think that metric will fluctuate over time. I think in the short to medium term, you will see lessor share of global aircraft financing go up because airlines had to do a lot of things. They had to spend a lot of their own capital structure and balance sheet capacity to keep the lights on to survive the pandemic. And so a lot of the balance sheet flexibility, a lot of the liquidity that they had to seek other forms of financing has now been spent in other places. And so lessors will play a critical role in financing aircraft in the near to middle term. That will continue to shift over time. I don't know, people have big numbers of where it could go to over the short time and then fluctuate down again. I think a lot of airlines spent the better part of the last upcycle, call it 2011, 2012 through 2019, building, very strong balance sheets, building the capability to finance aircraft through multiple different channels. I think that will return someday, but that could take, years for airlines to do that. And until then, lessors will fill that critical role of helping airlines finance their new capacity.
And while we've seen a distressed airline environment, we've also seen leasing remain very, very competitive. And anecdotally, you talk to lessors and they'll say, look, maybe at the outset of COVID, we had a bit of a bounce to lease rate factors and maybe return conditions that ultimately an increase in returns in one form or another, they were coming back to them. That seems to have dissipated as more and more capital kind of continues to be attracted to the space. How have you found it from a competitive situation post-COVID on the pricing side?
So very competitive, certainly. And I think you see the market rushing to, there's a barbell effect, which is everyone's rushing to the same types of credits, the same type of carrier, the same type of equipment. And so there's a ton of new capacity competing down excess rents in those areas. I do think, though, that there also will prove to be, over time, there's been a meaningful shift in the market in terms of lessors' access to capital and cost of capital. And so I think what you will see over time also is, and maybe people don't realize it now, but there's a smaller and smaller share of lessors that actually have the access to flexible capital, the access to sufficiently attractively priced capital to make those deals make sense. And so I think there's a rush to market to do those deals right now. I think it will take a little bit of time to realize that for a lot of people doing these deals, those deals don't make sense. But if you have access to senior unsecured, highly attractively priced, flexible capital, and you're not match funding, you're not into a structured vehicle that limits your opportunity to trade or take out that aircraft. I do think if you have those attributes, cost of capital will continue to differentiate, and the people who can do those deals of the upcycle will be the large global lessors like ourselves and a handful of other players.
Yeah, and you can totally get the logic in that. As you say, the ability of the IG-rated lessors to raise funds pretty much in the middle of last year is amazing. No more than yourselves. And you look at these rates that if someone had told you you're going to get them in March last year, you would have fallen off your chair. Now, I know that speaks to the wider interest rate environment, and we're going to have a slight uptick on that. I'm presuming you're still quite confident that the market or the global interest rates might tick up a bit, but the spreads lessors are achieving is sustainable given just the investor buy-in in the middle on the business model.
I do. And actually, to just go back a little bit to your prior question, let's not overlook the positive reason there's so much capital flooding into our space is because the lessor community has demonstrated what a strong, solid business model this is, through one of the greatest challenges in the history of aviation. And so we've demonstrated that this is a very attractive place to place capital. and so that's where the capital is flowing. So I think, yes, on the one hand, it's increased the competitive dynamic, but on the other hand, it has highlighted the highly attractive investment opportunity that leasing creates for investors across the capital structure. And then to your point, inflation, higher rates in and of themselves are not necessarily bad for lessor economics. In a way, in many instances, the way that lessor community places forward aircraft, inflation helps in terms of jeopardy upper sloping. So it's the volatility around inflation more, or the rate of change rather than inflation itself, that creates challenges. I, over the longer term, don't necessarily, I see some volatility, but I do think that, again, large global lessors with access to capital, we should be able to manage through that. We should be able to price on a relative basis tighter than competitors without that access to capital. And I do, to your point, I do think that we should, again, continue to be able to raise capital to invest at competitive rates that differentiates us from the ability of other people to generate returns with the kind of deals that we're seeing.
And it does potentially open up to what you're talking about, the haves and have-nots. I've got my large IG rated lessor that can tap the unsecured market, probably had strong capital behind it on the basis of that, right? It wouldn't be able to do it otherwise. Where does it leave the rest of the market? So if you kind of say, is it playing in the secondary space? Is it looking for more of those structured product, like maybe playing around the ABS type space? Where do you see, like you have that population, but it's probably no more than 10, right, of the large IG rated lessors. What happens to the rest?
So I concur with the thesis. What happens to the rest? I don't know. We'll see. I think it just requires more discipline and more creativity around what is the investment thesis of the asset across its life. So what is the entry point? What is the strategy with the asset? What is the exit point? Actively managing that asset. So I think the opportunity to just do a deal at the front and tuck it away and ignore it for 12 years, I think those days are quickly subsiding as it becomes a much more, the management of the asset is much more strategic. The sophistication around managing the fleet is much greater. And so I think it's people who need to understand the investment thesis across the life of the asset or across the life of the lease, and not just, here's the entry point and we'll figure out the rest later. I think that's really going to be a differentiator going forward.
And I mentioned briefly that ABS market was kind of the other side of capital markets. Have you been surprised at how quickly that market has come back? I know we're probably not back into a fully functional E-note market, but clearly the ABS debt market is there, and it really only sat dormant for 12 months. Were you surprised at how quickly that came back, and how important a channel do you see that being for the broader aviation finance community?
Sure. I am and I'm not surprised to see how quickly it came back. I mean, when you look at I guess I'll call it the aviation investor complex, which developed, over the last 10 years, the sophistication, the depth, the pool of capital, really when you think about if you look at the desks across a lot of these, whether it's banks or private equity funds or hedge funds or other types of investors, enormous sophistication up and down the capital structure, in aviation, which to me feels like a relatively new phenomenon. And so I think the fact that the ABS market came back, and when you think about where the overall rate environment is, secured lending, where people have grown to understand the risk and the opportunity over time, it was an opportunity for people to get back in at the senior parts. The senior tranches are the ones that really have come back with post-pandemic protections that have made it more investor friendly in terms of lower LTVs or other protections against collateral. So having seen that stuff come back, no, not entirely surprising in such a low rate environment. I think we're not there yet, though. We need to see the equity market come back. We need to see subordinated tranches priced tighter. We need to see LTVs go back a little bit to where they were before. That will take some time, probably through 2022, maybe a little bit later than that. Enthusiastic about the progress that has been made, hopeful, eager to see more progress as people come back across the entire ABS cap stack.
And doing a stand back then, maybe on the leasing sector as a whole, we saw some M&A activity at the start of the year. Obviously, we saw the supersized transaction, the aircraft acquisition of GCAS. We saw Fly deal, which you could argue was more a portfolio transaction, a little bit around DVB, which is a platform deal, and then quiet. And now we've obviously got allegedly a couple of deals in the pipe that may or may not happen. Your thoughts or likelihood of significant further consolidation within the market? You do look at, the large lessors like yourself, and do they say, well, is super scale where it's at, or where do I need to go in the context of we're number one in the market now has 2,000 aircraft, and number three has 600.
Yes, so on that, who knows? To me, as you had mentioned, there are a couple of alleged transactions, and then where from there? As we had talked about before, to me, scale is not necessarily in terms of being a competitive differentiator. To me, again, it's not necessarily number of aircraft. It's cost of capital. It's global marketing, technical infrastructure to be able to service airlines around the world. That creates the competitive advantage that comes with scale. Number of aircraft in and of itself, to me, I don't think necessarily. And in fact, you could argue that at some point the curve turns negative in terms of number of aircraft. So I do think that there will be a number of people who will try and use other types of transactions to get a little bit bigger. But the number of real platforms that would move the needle, it really starts to fall off. And so I think that at some point it's easier just to go buy a portfolio of aircraft for a certain, if you wanted to get scale, as opposed to buying a corporate entity and having to go through merger synergies or merger integration to get synergies. But we don't. I'm probably not the foremost expert on that in the space, so I would defer to others who may be looking at other stuff right now.
Yeah, this is it, right? And more and on. And I do think you're right. You do look at the top 20 players or so, and a lot of committed shareholders, who like the asset they have and like the returns that they have. So I say I'm with you. It doesn't jump off the page as to where you build 100 plus onto your balance sheet. Can I ask, we touched on the investor piece, Thomas, when we were chatting about how there has been an increase in sophistication. Your thoughts over how the investor base has evolved, or has it evolved post-COVID? Are there any trends you've seen with kind of new capital coming or capital departing? Or are you still into the same types of investor, be that Japanese capital, be that US private equity? Your thoughts in that area?
Well, to me, I think there had been the move toward, call it long-term patient capital moving into the space. That had begun for a period of time. So that to me isn't necessarily new. And Tokyo Century became a minority investor in ACG in 2017. So we had already started to move in their direction, years ago. I think the newest or most recent thing for me is the increasing presence of private equity in our space, where you really see large, sophisticated private equity players building large platforms, either through acquisition or compiling different pieces. I think that's one. And I also think the other thing that's new for me is you're seeing investors, and I think you'll continue to see this, investors seeing that it's not just leases, it's loans. So operating leases, finance leases, and loans being relevant to helping airlines finance aircraft, whatever their strategic priorities. Do they want to rent? Do they want to own? Do they want flexibility? Do they want to share both? So that to me, I think is the most interesting trend in terms of the movement of large scale private equity into our space, and then trying to create a more sophisticated spectrum of financing alternatives for airline customers.
Yeah, that alternatives piece is quite interesting, isn't it? Those non-traditional lenders, then, and as you say, private equity backed, the ones I've seen so far, or that are out there, and it's definitely an interesting trend, as you say. And then we've even seen, aviation ABS start to go that way with the Stonepeak transaction. So very interesting space as to where that will go. Can I shift gears slightly on you, Thomas, and take you to an area that's linked to finance, but just to get your thoughts? Obviously, like the existential crisis we have as a society is climate change, the ESG agenda, obviously hugely impactful on aviation. Can I ask you, as a very large scale lessor, is climate change having an impact on your business now?
I think the pace, the volume at which the conversation has turned up over the last 12 months, and it's great. It has needed to happen for a long period of time. I think you're really now starting to see the gears grind toward change. However, I think when you think about the system dynamics involved in creating that change, a lot of things need to turn, and it sometimes takes a while for those things to turn. And so I do think that you're going to start to see ESG become a strategic priority in the way people plan, and the way managers make decisions, and the way the board allocates capital for us. For our industry, which is more of a longer cycle type of, our investments are over 25 years, and that takes a while to turn. But I do think in terms of over the shorter term, using current technology aircraft to bridge to new technology, but then having the lessor community be a leader in helping the industry finance their way to more economically or more ecologically friendly new technology aircraft, alternative fuels, other things like that, potentially at some point, electric powered vehicles. But again, the lessor community taking the leadership role and helping finance those, I think you're going to start to see more and more frequently, hopefully even as early as 2022.
And do you see that influence piece, right? And as you say, it's coming, right? And it's important, and lessors have that part to play. And predominantly, as you say, it's attractiveness of new tech. Do you find it from your business at the moment that it's impacting on the debt side or the equity side?
So I would so it's a little bit of both. On the equity side, when I think personally about our equity, so ESG initiatives are critically important to our parent, Tokyo Century. And in fact, our Tokyo Century has a MSCI ESG rating that they care very deeply about. So we spend a ton of time with them already thinking about how we're going to allocate capital. And they think 10, 15, 30 years ahead. So we're spending a ton of time actually with Tokyo Century thinking about our impact, the impact of our business on them, but also on the environment and the global aviation space. On the debt side, we've heard a lot about, we spend a lot of time looking at or thinking about ESG bonds and other ways to structure ESG friendly leases. In other words, create incentives both on the capital raising side, but also on the asset placement side. A lot of time looking at it. We have more work to do internally, I would say, before we really feel like we understand it or where we feel we could play a role in it. But we definitely see it as something that's going to be important for us to understand in the nearer term.
And definitely a topic when we hopefully have this conversation, hopefully in person, Thomas, in 12 months' time. I think another one will be coming back to, and I found we've been doing these, obviously, for a number of years. That question just moved up the agenda from being an afterthought at the bottom to much more.
It's great.
Linked.
It's great.
Totally. Yeah, and as you say, it needs to happen. Can I ask you, one of the parties that will have a huge part to play around that agenda will be the OEMs. I know in chatting to your predecessor in prior years, he always had a slight gripe with how he felt the lessors interacted with OEMs. Your own view on what the pandemic might do for the interaction between lessors as they step in to take more sale and leaseback activity, potentially opening up greater sized order books. Do you see an evolution of the behavior between how the likes of Boeing and Airbus, you large scale lessors?
So I do. I think, at least for ACG, which is really all I can speak for right now, we demonstrated to both our OEM partners, to both airframe OEM partners through the pandemic, that we're strategic partners. and that working together is the best way to really get things done in both our interests. They have constraints, they've got challenges, they've got customers, demanding customers that they need to please, and we have to sort of compete sometimes for their affection when they are competing for multiple customer attention. But so I think there's a path forward where if they can deliver aircraft on time, then we can be a strategic partner for them. And I think if anything, they've realized that we can be good partners when we work in good faith and we all negotiate in good faith together.
And I'll ask for a guess here, and you can totally kick the touch. Do you think we'll see more lessors go down the order book route?
Again, I think you'll see bifurcation. I think you'll see a number of large global lessors who are looking to grow through multiple channels and have access to capital and who have confidence in the ability to finance themselves. I think you will see them continuing to grow order books over time, particularly with new technology aircraft, because that's where the market's going. And then you have a whole bunch of smaller lessors who don't have flexible corporate level access to capital, who need to fund through secured vehicles or warehouses or fund on a matched asset or match funding basis. That order books are tougher. So I think you're going to start to see a number of lessors who do have the capability and the confidence to grow through order books. And then you'll see a bunch of lessors who focus mostly on the sale-leaseback channel. So it'll bifurcate.
And take it back maybe to the metal side. And you mentioned you've had that narrow body focus, which in this market clearly was a good place to be. When you're thinking about investable metal, what's top of your hit list? So is it like a narrow body new tech, but are you looking beyond that and thinking, if an opportunity arose in X or Y aircraft, we'd absolutely deploy there?
I think we've got great confidence in our ability to underwrite investment opportunities. And so, our core focus is new technology, narrow body aircraft, so that will remain the sweet spot for us. But that doesn't mean we aren't participating in other opportunities. So we will finance medium wide body technology aircraft. We've financed 2 747-8Fs for air cargo in pre-pandemic, because we had a differentiated view on the transaction, on how mission critical those assets were to the fleet. And we underwrote it and structured the deal in a way that made sense for everybody. So yes, you'll see us primarily focus on new technology narrow body aircraft, but we are not afraid to look at and to finance other asset types for the aircraft if it makes sense for us, for the airline, for the opportunity, for the mission it's flying, for the network it has. It needs to make sense.
You mentioned the cargo piece there, which is obviously one of the bright spots we've had over the last 21 months. It's an area that's always been more spiky. Do you think that the pandemic has effectively accelerated a real and sustainable step change around cargo air travel?
As you sort of observed, cargo is notoriously volatile, air cargo. Air cargo is notoriously cyclical. And I think as we're seeing across the global supply chain now, I think what's happening through the pandemic to the global supply chain is not, I don't think, a new normal. It's creating all sorts of unusual patterns in terms of freight flows. So I would just caution, we are not prepared to underwrite cargo, assuming that what's going on today is the new normal. And we are not willing to underwrite cargo, assuming that the historical cyclicality and the historical volatility are gone. So I think we have a very cautious approach to cargo in the sense that I think people need to look, people need to be quite careful because, again, the volatility, the cyclicality, and the post-pandemic cargo freight trends are unclear to me at this time.
Yeah, no, I can get that. I can get that outlook, and you get long haul back. what that does for the wider cargo market will just be interesting to see.
But shorter haul domestic package delivery networks, that's a structural change that obviously is here to stay. So that's fundamentally different than the global wide body dedicated cargo that flies, stuff from Asia to Europe and from Asia to the United States and so forth.
And just in closing, Thomas, and I always like to throw this one out there at the end. We've been through a challenging nearly 2 years at this stage, where we talked at the start, you kind of, nearly 2 steps forward, 1 step back, but you feel like we're making progress all the same. What are your optimism levels like as you look out into 2022?
Oh, quite optimistic, honestly. I think that, again, we need to grind through, it's never a straight line. We need to grind through, stay optimistic, keep moving forward. But again, there was a lot of positive stuff we really started to see. People are focused on growth again. People are more enthusiastic about doing deals internally, our customers. So it's really, don't get discouraged by the intermediate term setbacks. Don't get discouraged that it's not, daylight from here forward. There will be some challenges we need to continue to grind through. Winter is going to be a little bit tough, but we're feeling quite optimistic about the future. We've done a lot over the last 1.5 to 2 years to continue to improve the business, such that when we do get some tailwinds in terms of macroeconomic activity, I think we're really excited about the stuff we can do.
On that very optimistic note, and what I'd echo and very much hope for, I'd like to thank you for your time and insights today, and wish you and ACG, on behalf of KPMG and Airline Economics, a very, very successful 2022.
Thank you. Thank you very much. Happy holidays to you and Happy New Year. Wishing you the best.
And to you. Thanks, Thomas.
Thank you.